Silver Stacker here. So, disinflation is over. It's finished, and inflation is about to rear its ugly head once again in a very big way. Today, the price of crude oil hitting the highest level in nearly 10 months, the highest level that we have seen so far this year, and this will be a major contributor to rising inflation moving forward and the end of the disinflation trend. However, it's not the only factor. So we're going to get into some of those in today's video as well, some of those other factors. But rising oil is really a critical thing. I mean, we've talked about this many times. Petroleum, crude oil, it's the lifeblood of a modern economy. It touches just about everything. And so as we see the price of crude oil spiking up today, it is a portent of things to come. Now, the thing that drove the price of oil through the roof today, the event, was the announcement by both Saudi Arabia and Russia that they will be extending oil production cuts through December. So Saudi Arabia extending their 1 million per day production cuts through December, and they have told us that they may, in addition to extending those cuts, they may deepen them as well. Russia, who had already cut 500,000 barrels per day of production, cutting another 300,000 barrels, and that is also through December. So we need to be getting ready for much higher prices across the board, a weakening US dollar, and a resurgence of this massive inflation. One of the ways we can get ready for that, get into hard assets. You know, even though the price of silver actually fell a bit today, that had to do with the rising US dollar index, the dollar index up on fears that we may have a significant global recession, a deflationary event. And there may be a major deflationary event before we ultimately get the massive inflation, potentially hyperinflation, that we are headed for. It's possible that we see the prices of these commodities fall. However, I do think that that will be a short-lived event. If you want to get your hands on some hard assets, some precious metals, make sure you check out today's video sponsor, sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. So, the Russians and the Saudis cutting oil production. What does this mean? Well, it means that energy supplies around the world are going to be tighter. It's also a sign, excuse me, of deeper cooperation between the Saudis and the Russians. OPEC Plus, the large organization which encompasses all of those OPEC Gulf oil producers, and then also Russia. You know, Russia, the world's second largest exporter of crude oil. And we are going to see inflation begin to tick up in the near future. In fact, probably just in a few days on the 13th of September. So 1 week from today, we will be getting the inflation numbers for August. And according to the Federal Reserve Bank of Cleveland, their inflation nowcasting page, which is like a forecast of where the CPI is going to be headed, you can see that for the August core CPI, they're expecting 4.46% year over year. That would actually be a slight decline from what we had last month, but they're expecting a tick up to 3.82% year over year increase in the headline CPI, which is a pretty big move up. Most recent number, 3.2%. Joshua Gaming Roaster says, did you see Heresy Financial reporting that the dollar will soar? No, I haven't caught that video. I will definitely check that out. Joshua, thank you so much for the super chat. But yeah, there is certainly a possibility that we could see the dollar soar in the short term should we get some kind of a major deflationary event. However, again, I do think that that will be short-lived, and that is because ultimately we know that the end game here is, you know, what it has been for the past 100 years plus. I've been doing some reading recently, The Creature from Jekyll Island. If you haven't checked this book out, it's worth a read. I've never actually read it before, but I'm kind of working my way through it right now. And, you know, it gives you a pretty good picture of the Federal Reserve System, how it was created, what it was created for, and what the ultimate result of having a banking cartel running the economy will be. And, we've seen that with the more than, 97% devaluation of the US dollar since the inception of the Federal Reserve back in 1913. So there's no reason to think that that is going to stop. However, right now we have this geopolitical confluence of events, groups like OPEC Plus, the Saudis, and the Russians working together to try to put the squeeze on the West. And yeah, that is part of what these production cuts are, especially from the Russian perspective. I mean, part of it has to do with the fact that they want oil prices to be higher so that they can make a higher profit from selling these, energy exports. But also, part of it is they're trying to put the squeeze in the West with higher inflation. There's ongoing economic warfare. We still have massive amounts of sanctions against Russia, and this is one of the ways that they can fight back. And they got the Saudis joining BRICS in January, so expect more of this as this cooperation between the Saudis and groups like Russia and OPEC Plus deepen and become ever more pervasive in the global economy. We're heading to a multipolar world order, and groups like OPEC Plus and BRICS are a huge indication of that. Also, we're going to see headline CPI tick up very likely in just a few days when we get the inflation data from August. That is, of course, the component of the CPI that contains the volatile food and energy categories. Core CPI, though, this is the component which excludes those things. And it has also remained stubbornly high. That nowcast that we just looked at forecast that this will be coming down. The most recent numbers, 4.7%, still way above the Fed's target of 2%. And I also want to point out that, higher energy prices, while they are excluded from the core CPI, they do ultimately affect this number. There's a bit of a lag on that, but if it costs more to manufacture goods, for example, that are not energy related goods, or it costs more to transport them, or any of the other ways that high energy prices can affect the economy, they will ultimately translate over into higher core CPI as well. Now, what does all of this mean? We got higher inflation. Well, I think that it means we're probably going to see a return to much higher food prices. So, to the extent that you can get prepared for that, do so. It's going to be more expensive to fill up your car. Rents and housing, all of these things are going to continue to squeeze consumers. And we know consumers are already kind of tapped out. So it does lead me to believe that there may be some kind of a deflationary collapse type event in the relatively near future, kind of like what Joe Brown was probably talking about over at Heresy Financial. I'll have to check out his video that you mentioned in the chat there, but this economy is incredibly weak. We have consumers with over $1 trillion in credit card debt for the first time ever. We have, I think, $1.57 trillion in student loan debt, and don't forget, those payments are going to begin again next month. So, consumers that previously had a moratorium on paying back that student loan debt for the past couple of years, now all of a sudden they're going to have that additional payment. So that's money that's not going to go towards other stuff. It is a further sign of consumers that may be coming under a tremendous amount of pressure. And we are just getting closer and closer to some kind of an end game type event in this economy. You got banks that are levered up to the hilt, sitting on $1.7 trillion in unrealized losses from low-yielding treasuries. You've got a Fed that, as we see inflation begin to tick back up, is probably going to continue hiking rates. I mean, the Jackson Hole meeting a couple weeks ago, Jerome Powell was waxing very hawkish, and if the inflation numbers begin to tick up again, well, what do you think he's going to do? I mean, he's not going to get dovish if you see inflation ticking up. Of course, the real thing driving a lot of this inflation, sure, there is, supply demand dynamics here in terms of energy and that sort of thing. But a lot of it is the massive deficits that are being run in Washington. So as long as that continues, we're on track for like a $2 trillion deficit this year. These rate hikes from the Fed, they're going to do little more than just destroy the economy. They're not going to fight inflation. I mean, perhaps to the extent that they can destroy demand, they might put a cap on inflation, but also If they cause businesses to fold up, if they cause workers to lose their jobs, that means that there's going to be less supply of goods and services. And so ultimately, while we're running these massive deficits and we're so indebted and you have these geopolitical problems all at the same time, higher inflation is kind of baked into the cake. And it's not just the energy supply and the price of oil. Very likely we're going to be seeing soaring food prices in the very near future. This is an article that was published in Yahoo Finance in August. These foods will be in short supply in 2023. So stock up now or find alternatives. And, I do believe that stocking up on food is a wise thing to do. You can't eat gold and silver, as they say. So having an emergency supply of food, whether that be, rice and beans and Mylar bags with oxygen absorbers and desiccants, I think that's a wise thing to do. If you're trying to get fancy, you can get the Mountain House freeze-dried food. That stuff's pretty good. Much better than chewing on, shoe leather if you get really hungry. I mean, read some stories out of like the Weimar hyperinflation or out of Venezuela recently. And, there was food available then, but it's just very, very, very expensive. And a lot of that had to do with the debasement of the currency, but also lack of supply of food. And one of the things that we're seeing right now is that global food supplies are becoming threatened. So what do they mention here? What foods are going to be in short supply according to this article from Yahoo Finance? Well, you got corn. Corn is in like everything, right? It's in soda, it's in chips, it's in pretty much anything at the grocery store that's a processed food has got corn in it. And Ukraine, one of the major sources of corn, has obviously been disrupted due to the war ongoing there. And, the Russians have abandoned the grain deal. And according to what I've read, the Russians may be willing to revisit that, but only if they are reconnected to the SWIFT system. And they have a list of demands which obviously are not going to be met. And so those grains will continue to be in short supply. You've got bread and flour. Once again, that has to do with Russia and Ukraine. It really is the breadbasket of the world, and that has been massively disrupted. That is going to lead to higher inflation. You got vegetable oil. I think safflower oil is a big one they produce there. But also, you got Indonesia halting the export of palm oil because of weather events there. They've got some other things here, kind of more, I don't know, minor things. Baby formula is not a minor thing if you got babies. Champagne, not so critical. But then this is a big one. India has also had a really big problem with their rice crops, and the global rice supply continues to tighten as India has persisted with their export ban I think they've banned non-basmati white rice. So not all of the rice exports have been cut off, but they are the world's biggest exporter of rice. So even when they cut off a portion of that, it's a big deal. And, one of the things you got to worry about here, as we see inflation rising, when you see things like essential foods and energy, the things that basically you have to have, your essentials, your most essential items out there, you need to worry about things like social unrest. If you start taking away people's ability to feed their families and to, heat their home and cool their home, the most, basic stuff, that is a recipe for some very unhappy people. And so, one of the things we need to be getting prepared for is an increase in unrest. I mean, we already saw what happened 2 years ago. You had cities being burned, windows being smashed, basically riots being dismissed as peaceful protests. Well, when people's, EBT cards won't work, or when the benefits that they receive that way won't purchase anything because the price of food has skyrocketed, or when you have people unable to afford the basic necessities, what do you think it's going to look like? It's not going to be pretty. And this is one of the things that we've seen in other examples of significant inflation around the world. I mean, in Venezuela, crime was through the roof. And again, you could still go out and buy food. You could still go out and buy gas there. It was just very, very expensive. The government implemented price controls and things, so a lot of what you did had to be on the black market. But, one thing that concerns me is if you're in the U.S., if you see an inflation in the U.S. dollar, how are people going to transact business? Is it going to be like Weimar Germany style where you got wheelbarrows full of cash? Now, I mean, I think we're a far cry off from that level of hyperinflation. But I mean, anybody who thinks that that can't happen need to study history a little bit more closely. And in Venezuela, when they had the major hyperinflation, people weren't going out to the store and paying with gold and silver. No, they were using U.S. dollars. But what happens when the dollar is the currency that's being inflated away, right? I do think that there's a case to be made that gold and silver could step in and substitute as money. I mean, we'll have to wait and see. There's no crystal ball that can tell us exactly how this is all going to play out. But the narrative that we were hearing from the establishment and from the Fed that disinflation was the new trend and that, hopefully these rate hikes were working and inflation was coming down. Of course, we never actually had a reversal of inflation. The whole disinflation thing, all the disinflation is prices going up, but at a slower pace. So we never actually got deflation or a reduction in prices. We just had prices that were going up a little bit more slowly. I mean, they were still going up pretty quickly, but not as bad as it had been. But now that's over, folks. That's over, and inflation is about to rear its head in a very big way. And a lot of this stuff, I think that the risks here are being overlooked by the mainstream, and this could really run away from us in a relatively quick way. And if we do get a big deflationary event, I think that when we see how the Fed and the establishment, the powers that be, the Treasury, all the folks who are going to coordinate to save us from what's coming, the reaction probably will be more harmful than the events themselves. That's one thing that we've witnessed over the past couple of years, is that no crisis exists that can't be made worse by the powers that be intervening. And that is ultimately where, the real inflation is going to come from. It's going to be the creature from Jekyll Island. That's the Federal Reserve, is going to be running the printing presses in a very big way. Mikey's bouncing in the chat said, I know you do not like to predict prices, but what would be your estimation for 2024? I'm assuming that you are referring to silver or perhaps gold. I don't know. I would say that, I think that when the Fed reverses policy, whenever that might be, I mean, I think it probably will be at least by the end of 2024. It might even be before the end of 2023. But when the Fed reverses policy, I think that we may very well see new all-time highs in the price of silver. That would mean $50 plus. I think that is a reasonable price target. One thing that you see with the price of silver is it's much more volatile than the price of gold. When you have these big down days, it can move down really fast. And when you have big up days, it can move up really fast. And I think that there's, a strong possibility silver could double in price when the Fed reverses policy, whenever that might be. And, that won't happen, I don't think, until something breaks in this economy. But we're getting very close to that point. As evidenced by a number of these data points. You've got interest on the national debt close to $1 trillion, on track to become the single largest item on the federal budget. You have got consumers getting tapped out, as I mentioned earlier, with $1 trillion in credit card debt. You have got a very unfriendly geopolitical situation. The countries around the world, like China, for example, that have been buying up U.S. treasuries in the past and willing to help us export our inflation, they're no longer on board for that. So all of these things together, you got the potential end of the petrodollar right around the corner. That hasn't happened yet, but when it does, and I think the writing is on the wall for the petrodollar, that's going to mean significant dollar devaluation. So yeah, I mean, silver hitting $50, I think, is a no-brainer. When will it happen? I have no idea. It's not financial advice. But that's how I see things playing out. And I think ultimately, by the time we reach the end of this cycle, you may see new all-time highs for silver in real terms, which would mean like $200 silver is, I think a reasonable estimate for that. There's very few commodities right now that trade below their price levels from the 1980s. Silver is one. Silver, if you take the all-time high from 1980 and adjust it for inflation, it is right around $200. So, and that's using the CPI, which understates the level of inflation significantly. So I think that there is a strong case to be made for $200 plus silver. That's why I'm still buying it up. I view it as a very undervalued asset. I don't think there are too many of those around at the moment, undervalued assets, although, Energy might be a good thing to look at. Energy producers, if you've got BRICS and Russia and OPEC Plus and Saudi Arabia all trying to tighten up energy supplies, we probably will see triple digit oil in the relatively near future. I do think that is on the way. That may be one of the events that helps to bring in the global deflationary collapse. If the price of energy gets too high for the economy to function in a quote unquote normal way, very well that could be the thing that brings about a collapse. Maybe it'll be some kind of a black swan event. Of course, black swans are things you can't see coming, so hard to predict them. But we certainly do seem to be ripe for one. And one way you can tell that a black swan is something that will create a lot of havoc in the economy is you just have to look at how fragile things are. We do not have a robust economy. We have the opposite of that. We have an economy where, you begin to get interest rates up. What are we at? The federal funds rate, like 5.25 right now, 5.25, something like that. That historically is a very low level. I mean, the federal funds rate has been close to 20% in the past. And yet, our economy, there's so much leverage, there's so much debt, the national debt, the consumer debt, the corporate debt, all these forms of debt, they make the whole system very fragile to collapse and to an implosion. And of course, I don't think that the powers that be will allow there to be any kind of implosion. They will come to the rescue and they will bail it out. But that is why inflation is going to get out of control. Once you get into a situation like this, you get these debts which are just absolutely unpayable except in devalued currency. Well, you either have to default or you got to devalue the currency. And history tells us that what will happen very likely is a currency devaluation. So that's why I'm stacking gold and silver. Today, a bit of a pullback, probably a good time to be doing stacking. Again, not financial advice, but this is the kind of day when I like to stack. You see the US dollar index on the way up. We got some weak economic data out of Europe and China. There are fears of global recession, and so the dollar is strengthening. That means that if you're holding a bunch of fiat dollars, it's a very lucky day because you can go out and you can get real money on sale. So that's what I like to do on days like today. But leave me a comment down below to let me know what you think. Is inflation on its way back up? How bad do you think it'll be? And if you've got a price forecast for silver by the end of 2024, leave it below in the comments. I would love to hear it. And yeah, please smash the like button if you enjoyed this video. Tell your friends, subscribe to the channel if you haven't done that yet, and I will catch you next time. Thank you all very much for tuning in today. Stay safe and happy stacking. Smart Silver Stacker, out.